Hey, what's going on YouTube? Corey Smith here, CoreFX, bringing you another pre-week market analysis video. It is the week of February 25th. I'm recording this video a little bit earlier, but this is for the week starting on February 25th on a Sunday for the Forex markets. As we know, the markets open on Sundays and close on Fridays. If you're new to these videos, my name's Corey Smith. I am the founder of CoreFX. I do analysis here through T3 Live on their YouTube page. Basically what I go over with these videos is I go over a breakdown of the Forex markets. I cover all of the top currency pairs, the 8 listed here on the screen: dollar, pound, yen, CAD, Aussie, Euro, Swiss, New Zealand. I go over the top performing and underperforming currencies of the prior week. I go over all the major news events going on in the news the prior week, as well as what's going on in the week ahead and what to look for in the news and what to be aware of. I also go over a breakdown of the technical analysis of each of these individual currencies based off their indexes. So a basket of currencies compared against that currency to show the overall performance, just to get an idea of where each currency could be headed for the week ahead. And I will go ahead and cover those here. I also cover an in-depth technical breakdown for my students with my full Forex online training program. That'll be found at corefxtrading.com. But there's also tons of content here with T3 Live. T3 Live has their own awesome educational courses as well. Please make sure you guys subscribe to the page if you like these videos. Give me some kind of a shout out. Give me some kind of advice or criticisms or compliments or anything you want. Corey at corefxtrading.com or right on the videos here. Make sure you like them. Make sure you check out all the other videos they offer here on T3. They've got a wealth of content for all the financial markets. So make sure you check them out on here. I'm going to go ahead and jump into last week's analysis, starting with top performing pairs. The dollar was the leader of the week. And the reason this whole average is coming up as negative numbers is because the dollar is really what everything here is mainly weighted against. So the dollar was the top performer. Then we had the pound and the yen and the CAD as the nearest 3 performers behind it. So the pound, yen, and CAD were all top performers under the dollar. And then the weakest performer was New Zealand dollar, followed by Swiss franc and the euro. Basically, the story of the week was dollar strength. That was really the main thing going on in the FX markets. But there was some New Zealand weakness that could have been played as well. Taking us over to the charts, the dollar has been in this downtrend, and as I told you guys last week, this drawing is still up here from last week's meeting. We had a support hit here, support hit again, and last week's Friday closed with this bullish engulfing candle off this bounce. We had some divergence on the RSI indicator, moving opposite direction of price action, showing us there was even more of a potential that there could be a bounce and a reverse in trend. And this week, dollar did exactly that. So we had 1, 2, 3 bullish days to start the week. Thursday was a bearish day, and then Friday was pretty much flat, but a little bit more bullish. So we do have this bounce. We are now at the neckline of the double bottom. So for the double bottom to be valid, this neckline needs to be broken. It was also a strong supply zone that we got formed here, so we'll see what price does. We had a bearish engulfing off, so this downtrend could resume this week with the dollar. We could see this continue back down to this low, 89 to 88.50 area, and continue this downtrend from the dollar. So we'll have to wait and see. Or we could break higher and form this double bottom, break the neckline, and then that would be a nice pattern formation. Then we could look for a 1-to-1 move of this double bottom, looking for our targets about up here around the 93 area, I would say. All right, so dollar's really at an inflection point where it could go either way, so we're gonna have to watch and see. But we're now in a downtrend. I mean, we're still in a downtrend, and we're now at a nice rally point. We hit a supply zone, overhead resistance. Good opportunity to be looking short the dollar again. The euro, exact same thing, but the opposite direction. I showed you guys this as well, more of a triple top here. But I showed you guys when we came up to this top here that we could do the same thing as the dollar. We didn't have as nice of a pattern or divergence, but we still had the same type of setup, and we got the same type of result. Yen, Another beautiful technical setup. We've been in this range that we were in for a full year. Broke out. We were up here last week. I told you guys we could get a retest before continuing. Price did exactly that. We had Monday, Tuesday, Wednesday pull back to retest. Then Thursday, Friday kind of bounced off of it. I think there is some more upside to the end to come. Pound, not really too much going on. We set this higher high, set this higher low. We thought we were going to come up and set a higher high, but price action was just pretty unimportant, pretty insignificant. There wasn't much moves going on this week in the pound, so a little bit of just like a choppy sideways type week. Still going to have to be looking for the upside, but we could roll over here now as we potentially have set a lower low, lower high, which this could roll over, but we'll have to keep an eye out and see. Canadian dollar did exactly what we expected as well. Hit this weekly trend line, set a lower low, came up to set a lower high, and last week I was saying we could potentially come down to set a new lower low, and that's exactly what price did. We set a new lower low. We're down here now. Price pulled back up a little bit. This is a strong level here on the 78 level, so we'll see if CAD taps that or even just rolls over now and goes down. The 200 SMA is acting as support. So we'll have to wait and see if we're able to break that, but I think the CAD is moving back to the downside. Swiss franc, we set this higher high last week, and we said that it could pull back or it could just keep running away. It pulled back, so we're back in this area. Decent area to be buying as we're still setting higher highs, higher lows, higher high, higher low. On the low, this is a pullback. This could be an area to start looking for the Swiss franc long. Aussie, we had this very strong uptrend coming up, then we reversed super hard and set a new lower low. Came up last week to set a new lower high, and we said we could rally off, continue this now downtrend, or break higher and go back up, but we moved back down lower. So we could see the downtrend continue with this if we see a break of the 78 and price continues to fall. Switching over to New Zealand, as you guys saw last week and the week before, we went over the weekly zone. We were under 75 here at a very strong level. Price had come back up to touch resistance again last week. And as you can see, we sold off and we have completely moved away from resistance there. Now we've got a bit of a double top pattern here. 72 holding as the neckline. So we'll have to see if price is able to make it down that low. If so, if it's able to penetrate 72, or if we get a bounce and we get it back to continuation of this uptrend, which we would need to set some higher highs above 74 there and come back up to around the 75 region. All right, so that pretty much, that pretty much covers all of the indexes here on these charts. So I'm going to go ahead now and switch over to the news events, starting with last week. On Sunday, we didn't have much of anything going on. Told you guys Sundays don't trade, especially if there's nothing going on. Then Monday we had Carney speak, but nothing really going on there. Then we had the producer price inflation numbers out of New Zealand beat expectations. That was a good, decent sign. Nothing too crazy going on over there with inflation, but it's definitely something we're still watching all around the world. Monetary meeting minutes out of RBA. Pretty uneventful. The Aussie was mixed off the report price action wise, and it was basically because the report was pretty consistent with their prior stance on monetary policy. Nothing much new for the market to digest, so nothing really too crazy going on there. Tuesday we had nothing at all really going on. The global dairy price used to be a big event for New Zealand dollar. Used to see some strong reactions to it, but it has now become pretty much non-existent. It's not important anymore. Wednesday, European PMI numbers, the Purchasing Managers Index. Every one of them missed, showing there is an agreement across the board in Europe that business conditions were less favorable now than expected and than they had been in the past. Now, that being said, these are still very strong, high numbers, so it's nothing really to worry about. But if this is something that becomes trending and starts happening more frequently in Europe, then this is something we could definitely want to keep an eye on. Then we had the pound jobs reports. So wages remained completely the same. This is the wage growth, remained exactly at 2.5. Claimant count unemployed dropped significantly, about 10,000 almost. People collecting less than they thought, which is another great sign. Then we had the pound's inflation report right after. And this is the hearings where Carney sees signs of wage growth firming, aka improving. So that's really the main takeaway I got out of that. And inflation is most likely going to pick up. I'm sorry, no, it's not going to pick up. It's going to slow down. They're expecting it's at its peak right now because it's above target in Great Britain. We're at about 3%. Target's 2%. So they're thinking it's going to ease off a little bit. But he was also mentioning in the speech that the signs of wage growth firming are apparent. So they're starting to see wages pick up, which is a good sign for the UK as well. Then we had the U.S. dollars FOMC meeting minutes, the detailed report of the last rate decision. Fed basically said that they're not concerned about the U.S. economy overheating. Overheating economy would cause for them to hike rates more frequently when you need to slow down inflation and growth like that and keep it at a sustainable rate. Inflation, it needs to be under control, and this is done with interest rates, monetary policy tightening. So basically the FOMC came out and said that there's no real need for anything other than gradual rate hikes still, as the economy overheating isn't really something they're worried about. They do expect inflation to pick up this year, but they kept the same wording as gradual rate hikes to be taken. So that isn't any more hawkish of a statement than we were anticipating. We're anticipating with the strong CPI numbers and strong data out of the U.S. we've been seeing for the central bank to be a little bit more hawkish, but they weren't, and since they weren't, this was taken as dovish, and the U.S. dollar sold off because of it. U.S. dollar lost a lot of its gains, not a lot of, but it lost some of its gains there off that report. Then we had the pound's second GDP estimate, so this is going to be after the first one, obviously, and it's not that significant of a reading, but it was adjusted slightly lower than expected, and really not too significant, but still something we want to keep an eye on. European Central Bank policy meeting minutes. Basically, they saw that since inflation still remains so low in Europe, which we saw with the last CPI readings, the ECB has avoided any market surprises or more hawkish rhetoric. So they're in no hurry to hike rates. Monetary policy expecting to stay the same, even with their balance sheet being reduced this year. There's still no relevant rate hikes, but as soon as that inflation number starts picking up, this is going to be the story to watch. CAD retail sales missed expectations, as we're starting to see a little bit of a trend of this. Consumer spending decreasing in a lot of the main developed countries. CAD was just choppy off the report. But then you got New Zealand dollars retail sales right after, beating expectations. However, New Zealand dollars still remained weak. Even after that report, it wasn't able to gain any strength. It just sold off even with strong numbers. So that was a sign that the New Zealand dollar could remain bearish even in the next week. We had final CPI out of Europe, was as expected, still much lower than the target of 3%, and it was the final reading, so not very eventful, not too much going on. Then you had CPI out of Canada. This was one of the biggest events of the week. It beat expectations, and Canada did gain some strength off it. Bank of Canada is very data dependent right now as they entered their rate hike cycle last month, and inflation is the most critical piece of data they use to determine that. So the CAD ended pretty strong off of this report, as we had a very solid beat to CPI numbers here. Alrighty, so also to end the week on Friday, President Trump spoke at a CPAC meeting and talked about the strength of the economy and the markets and all, and the stock markets did rally. Taking this over back to the technical charts on the S&P 500, you can see here on Friday we had a very nice, strong, bullish, full-bodied close, really somewhat above this resistance and 50 SMA. So that was a very solid way to end the week for the U.S. stock market, and we could see a continuation of this to the upside next week, which of course would put us in a risk-on environment, and then we would want to be shorting the yen and buying New Zealand Aussie CAD. But we'll have to wait and see how this plays out, how the markets open. Taking us to February 25th, that's this upcoming week. That is going to be what's happening starting on Sunday with zero, again, like usual. Then on Monday, ECB Draghi speaks, testifying before the Parliament Committee about monetary policy and inflation outlook. So whenever they're talking, there's a central banker and they're talking about monetary policy and specifics, and especially inflation as well. This is something we want to be aware of, something we want to watch, something that could get trading going on a Monday with the euro. That's about it, though, for Monday. A couple other FOMC and Monetary Policy Committee members talk. Then we've got the New Zealand trade balance, which could be decent. Just the difference between exports and imports in New Zealand could be a decent trading event, or if you're already in a New Zealand pair, maybe it helps you out, hurts you, whatever. Then on Tuesday, we have the German and the Spanish PMI numbers. German's is monthly report. Spanish is year-over-year report. And it is these are the two of the biggest economies in Europe. So their inflation is going to have an impact on the Eurozone's inflation. And their inflation is something we want to start seeing pick up if we want to see the European Central Bank start to hike rates again. But we'll have to wait and see how these perform, but this could move the euro at least a little bit. And it definitely is something we want to be watching. If you see past few readings, they've still been mixed. They haven't really been beating. That's been much lower. So we really need these numbers to start picking up if we're going to have any chance of the European Central Bank starting to hike rates. Core durable goods orders out of the U.S. This basically is a gauge of the purchases made by manufacturing companies, and it acts as a leading indicator of production. So if companies are buying a lot of materials, then they're going to be producing a lot of materials. So this is basically just a gauge of the durable goods orders from manufacturing plants in the U.S. to see how the future of production and really output of our economy is going to look. Fed Chair Jerome Powell, he's the brand new Fed Chair for Janet Yellen, whose term ended, and Jerome Powell is the new elected official. He testifies on the Monetary Policy Report. It's his first major event with him as the Fed Chair, so it could be interesting. However, he's going to be very careful with his wording from here on out, at least in the beginning times. Not to throw any curveballs or stir the waters too much, since he is a new candidate, a new Fed chair, and that could leave some, some room for criticism right off the bat, and definitely some big moves if he does come out with some form of changed rhetoric or outlook or anything like that. So I think he's going to play it very safe, very conservative, not say anything different than what they've been saying, be very limited in general with his talking, and we'll have to watch and go on from there. Then we have the Dollar's Consumer Confidence Report. It's a survey of U.S. households to gauge the level of consumer confidence. Basically, it's a leading indicator because if consumers are confident in the economy, they're going to spend money. If they're going to spend money, that's going to stimulate the economy and everything else within it. And then you've got New Zealand ANZ Business Confidence, the same thing, only they're serving businesses, not individual households. So then we have manufacturing PMI out of China. This is, again, the Purchasing Managers Index. It's a leading indicator of economic health. So it tells us in the future what the manufacturing industry and really the overall climate is going to be like. And China is the second largest economy in the world, so it's certainly something that we want to be aware of. Wednesday, we have Europe's CPI, the flash reading. This is the first one, and it is very important data. As I've been preaching already, inflation is one of the only things in the way for the European Central Bank to look to start hiking rates, aka tight monetary policy. This data is watched very closely by traders, investors, and banks and all, as well as the central banks. They're all going to be watching this to see what numbers come out. We want to see this inflation start picking up again if we want to see them start hiking rates. So we're going to have to keep an eye on this. Then we have the U.S. dollar's preliminary GDP. This is a quarterly reading. It's the first of three. So the first reading is going to be the most significant. So this GDP number right here on Wednesday is definitely going to be something we want to be keeping an eye on and worth watching. Then we have China's manufacturing PMI. This is the Caixin reading. This is a third-party reading. It's the second PMI reading, and it's usually more closely watched and more closely followed as it's done privately. We also have private capital expenditure out of Australia, so this could be a double trade here for Aussie or even New Zealand off this, both events affecting the same currency. Taking us to Thursday, we have the pound manufacturing PMI. Again, went over manufacturing PMI, but it's a leading economic indicator from surveying business managers to get an idea of the business climate and how they are likely to act because of how they feel in the climate. After that, we've got, from the U.S. dollar, we've got Jerome testifying again in front of the Senate Banking Committee on the Monetary Policy Report. Then, following that, we have the ISM Manufacturing PMI. Again, you guys know what manufacturing PMI is. It's a strong reading, and we get the one out of the U.S. on Thursday. Taking us into Friday, we have German retail sales and Spanish unemployment. Again, they're big economies for the zone. So all of these things, like we watch for individual nations outside of the Eurozone, for the Eurozone, it should be watched as a whole Euro, as well as each individual nation's broken down reports, because this could show us some trends, some things that we want to be aware of, and so on and so forth. So then we have Theresa May, Prime Minister of the UK, speaking. She will be talking about the post-Brexit relationship with the UK and the European Union, and basically just she's going to be going over some proposed ideas and all about how the relationship will continue after the Brexit deal is negotiated upon and happens. Then we have construction PMI out of the UK. And again, this is just a gauge on the construction industry and surveys purchasing managers to see how they feel about the business climate. Again, something to look for trends, but something definitely is still important to watch. And then Governor Carney speaks on Friday, and he will be talking about the evolution of money as well as cryptocurrency. So if you're a crypto trader, big news coming out on Friday as the Bank of England is going to be talking specifically about cryptocurrencies live. So definitely something we want to watch. And then we have the Canadian dollar's GDP monthly report. This comes out every month. It's their gross domestic product report, and it always causes pretty strong CAD moves. After strong CPI, especially that the U.S. dollars had last week, this could be big. This could be a big step into showing that Canada's going to have to keep hiking rates if growth keeps continuing. We had a very strong CPI number, so we'll see if this reflects into GDP at all and how we go from there. All right, so that should cover it, guys. Again, I have more in-depth analysis for my students at currencies.com. Instagram, core.fx, if you guys want to check it out. Thank you for watching these videos. I really do appreciate it. I hope you guys get something out of them. I put a lot into them, even though I love doing it. It's still a lot that I put into them, so I hope that you guys are getting stuff out of it. And if you have any recommendations, things you want me to cover, things you want me to add, anything of this sort, please let me know, and I will get on it for you. All right, thank you guys very much. Please subscribe to T3 Live, like their videos, share their posts, and check me out, corefxtraining.com. And thank you guys. I'll talk to you soon.